Welcome back. It is 6:36. Following the crisis in Japan, what are the effects on the global economy?
Here to discuss that and more is smart money expert David England. David's an associate professor of finance at John A. Logan College and founder of thetraderseye.com. Good morning, David.
Good morning.
Well, I want to start off talking about Japan, and where does Japan stack up when we're talking about the worldwide GDP?
Whenever we take a look at the GDP, gross domestic product, we must also realize it's not just product, it's intangibles. So services and products. In 1995, Japan, their GDP was very large, around 18%. But that's been reduced. In 2005, that was reduced down to about 9%. So it's already shrinking in size. Needless to say, this is going to be very, very dangerous and detrimental to the Japanese economy.
What are some of the biggest issues facing Japan now as far as business is concerned?
Well, as we just saw in your last telecast, this mess with the nuclear situation is not over. Of course, our thoughts and prayers go out to all of those in Japan during this situation. Well, there's always negatives and there's always positives. The negatives are, especially with our economy, it's already affecting our automobile manufacturing by not being able to get the parts. It's already affected our computer manufacturing by not getting the memory chips. So there are some things that are definitely going to be affecting us. On the positive side, there's going to be many opportunities. Great opportunities for our heavy machinery. Great opportunities for our natural gas to be able to take the place of some of their nuclear power. Great opportunities for diesel and also our agricultural products. Most people don't realize it, but Japan was our #1 importer of our corn. Well, it's going to be cut down for just a little bit in the short period of time, but unfortunately many acres are going to be gone as far as their planting. So there's going to be a greater demand for agricultural products.
Yeah, and where the market is concerned, we have had consolidation.
Oh, yes.
So what do you see going forward with that?
Well, first of all, the market's going to gap up this morning. It's one of those very, very strange things. Oil is trading up over $102 a barrel, and the market's gapping up. Go figure. But part of that is due to the fact that we're only about 3 weeks away from the earnings run period. It starts with Alcoa in about 3 weeks. So normally it will run into that. Personally, I see that there's going to be more weakness ahead. We're trading technically underneath the 50-day moving average. That's very bearish. That's one of the things that as technicians that we look at. It's just one of those things that I'd be very careful at this point in time before jumping in, because there's going to be more weakness ahead. You can't have increasing cost as far as the cost of goods and it not affect the company's earnings. It's going to be coming out very soon.
And you mentioned oil prices and the situation in Libya now. Is that going to have another impact on what we're paying here?
It already is, Kevin. Oil used to be what we call the invisible tax. Think of okay, we're drinking coffee this morning. Think of how many times that coffee has been taxed and how many transportation costs there's been from the time that seed went in the ground in South America, whatever country it was in, until it got here. There may be 15 to 20. So with increased transportation costs, that's an invisible tax. That's not just whatever we see when we go to the gas pumps at 253, or excuse me, 353. I wish it was 253.
Yeah.
So there's going to be more and more invisible taxes. That means that there's going to be less dollars spent to buy other things. So it's going to be very dangerous. At 353, people grumble about it. At 375, they watch what they spend a little bit more, and at $4, they start to carpool and do these types of things. Yeah, sure. But once again, that's less money that's going to be able to be available to be spent to other things. But it's not always negative. For a situation like this, I teach in my classes and seminars, there's always opportunities. Now, not opportunities that we just buy them and hold them and forget about it for 10 years. But we take a look at the signals on telling us when it's time to buy and when it's time to sell. And we have several people have been hundreds of students have been very successful with that strategy.
And real quickly, speaking of your classes, you do have one coming up on Friday, right?
Yes, a technical analysis seminar. I'm going to teach people how to make money with it. We don't buy what we think, we buy what we see. And I will show them the facts about what goes on in the market. It's Friday. We keep our costs down to just $79. They can call a continuing ed department for a seat, and I would get a seat because it'll be full.
Excellent. Thank you so much, David England, our smart money expert today. We appreciate your time.
Thank you.
Thanks, David.